again. Thank you for stopping by, and glad to have you. And yeah, so today Bitcoin is down again. We're hovering just around 31.3 as of this recording, and so yeah, the overall market is just looking like one major slump. Ethereum down to $1,700, so interesting. And Shiba Inu actually is up while everything else is down. So I thought that was pretty interesting. So I have a few things to share with you guys today, just some important news that you might want to know. So let's jump right into it. Welcome back to OnChain-Analysis, where we provide recent news, on-chain fundamentals, and technical analysis. We believe that the best decisions are informed decisions, so kick back and let us do the work for once. The price for this content is a generous donation of only one like, so please hit the like on the way in and help out the YouTube algorithm. This simple gesture will help get this video out in front of other crypto investors. The subscribe button will add you as a member of this community and will automatically enter you in to win the On-Chain-Analysis Investor of the Year award and some very cool prizes. The first 100 subscribers will also be entered into our 2021 bull market bonanza, where the lucky winner will get an opportunity to win over 300 million Shiba Inu tokens. First up, crypto fund executive blasts Chinese miner FUD, says bigger catalysts drive Bitcoin's price. So, yeah. I watched a video earlier this morning from Michael Saylor, who was saying that, the market is down because of capital moving its way from China, west, and in the middle of that transition, capital is being taken out of the markets. However, this wealth fund manager here says that Bitcoin mining only makes up just a very small portion of the actual market share for Bitcoin, and I'm really believing this as well, because I do think that miners hold a lot of Bitcoin, and and they probably decided to sell their funds to move them as they were moving out of the country, out of China. So I do think that some of the downside pressure is coming from Chinese miners who are selling their setups and stuff like that and heading west. But I don't think that is all that we're seeing. I do think that the current regulatory environment is feeling a bit aggressive these days. I know there's been a lot of talk about inflation and regulations and stuff like that. And so I just think investors are feeling, a little fearful, and for good reason. I mean, everybody has their own risk tolerance, right? So I mean, I just wanted to throw this out there that Bitcoin call options end on the Friday of every month, and if we look at the charts over the course of the last few months, we can see that on the Friday of each month. So let's just go to the calendar and look at the Friday for each month. So the last Friday of every month was the 25th of June, and it was the 28th of May. So if we go to May 28th, and we had this dip right here. And then this dip landed on June 22nd. So just at the end of the month. If you look at this wick here, we were down very far at on the last Friday of this month. So yeah, so I mean, and I can go back even further. So this dip here was on April 25th, and we can look at April, when was the last Friday of April. It was actually on the 30th. So let's just take a look at April 30th. April 30th, there was a dip in the market. So, I do think that this is just the combination of a number of things. I don't think that this is, we can really say that we can point to one thing. As everybody knows, we had this death cross here on June 14th. And, that really solidified our downtrend over the last, 10 weeks or whatever it's been. So, we've been down significantly, but if we look back in the history of Bitcoin, um, Bitcoin has had crashes like this during bull markets. So, we can't say definitively that the bull market is over. And it's just, I think it's just a combination of a number of things. And obviously, I am not a financial advisor. And please do your own research. But yeah, I think that we could possibly see further upside. So also in the news, Elon Musk and Jack Dorsey have agreed to talk about Bitcoin at an event in July. The event is called the B Word, and I guess that means Bitcoin, and is scheduled to take place on July 21st. Comments from Musk have taken Bitcoin investors on a wild ride lately. And I know a lot of people are not happy with Elon Musk. His tweets have been, pretty much causing price fluctuations and increased volatility in the market. And so I personally have been irritated, and I'm sure others have as well. So here's a tweet from Jack Dorsey that said, the Bitcoin development community above all else, as more companies and institutions get into the mix, we all want to help protect and spread what makes Bitcoin open development so perfect. This day is focused on education and actions to do just that. So Elon Musk says, "Buy curious." So I don't know what that means. I don't know if this is some type of sexual innuendo or what, but yeah. So I hope Jack Dorsey is going to talk to him about tweeting. That would be great. So for the bit curious, very well then, let's do it. And Jack says, done. We'll set it up. Musk agreed for the Be Curious, blah, blah. The event is scheduled July 21st, according to the website, offering a live experience and a library of content to the investor community, enabling a more informed discussion about the role Bitcoin can serve for institutions across the globe. So I do think this will be a good thing for Bitcoin. I think raising more awareness. And again, this is a CNBC news article. So, yeah, I mean, the fact that cryptocurrency is getting mainstream attention is a really good thing. I think that, the more mainstream attention that we get is a clear sign that, cryptocurrencies are becoming more and more accepted. So, while there is this sort of narrative on one side where the Fed is talking about money laundering and market manipulation and protecting investors, this other narrative is showing that cryptocurrency can serve as a stable store of value for investors, over the long term. So I do think that this is a comparable narrative that can sort of cause some equilibrium to the overall narrative that the Fed is pushing these days. So I do see this as a good thing. We'll just have to wait and see sort of what happens here and what the conversation is actually about. Obviously, I will be continuing to follow this story, and we'll keep you guys updated as we go along. So Bitcoin will go all the way to $160,000 this year, says Celsius CEO. Although the price of Bitcoin continues to hover around $30,000, industry experts are noting that there is a bullish long-term view. To put this into perspective, Alex Mashinsky, Chief Executive Officer and co-founder of Celsius, the centralized cryptocurrency lending platform, told Cointelegraph at Bitcoin 2021 in Miami that he sees Bitcoin reaching $160,000 this year, or possibly a bit lower. We haven't seen the highs yet for 2021, Mashinsky said. Mashinsky further remarked that the crypto market was bound for a correction following Bitcoin's recent all-time high of 63,000. When you go too high too fast, you are bound for a correction. You can see my tweets both in March and February saying we're going to have a crash, we're going to have a correction. I predicted $30,000. Bitcoin is like a spring. We stretch it too much and we put too much leverage. Too many people got greedy. So, I do believe that this was the case, was part of the reason for this huge crash. A lot of people were highly leveraged in Bitcoin. If I can pull up the charts in my next video for you guys. We can go through some of the on-chain metrics to look at exactly all of the shorts that were eliminated at the liquidated during the initial dip that was caused by Elon Musk's tweet. So the article does go on to talk a little bit about that. And it says, in addition to discussing the price of Bitcoin, Mashinsky commented on Elon Musk's recent tweet about Bitcoin. According to Mashinsky, Musk is not helping the crypto community, but rather manipulating the market. As such, he noted that Musk is simply a tourist in the land of crypto. Mashinsky also noted that Tesla accepting Bitcoin payments will benefit Musk, but not consumers. He went on to say that if the richest guy in the world is willing to exchange a Bitcoin for a Tesla, you have to ask yourself, who is getting the good deal? The minute you buy that Tesla is worth less than what you paid for it. But Bitcoin is going to continue to increase in value. So that transaction is good for Elon, but it's not good for you. So, yeah. So that is I think that's a fair sort of analysis of the current situation. I do believe that the market will see further upside as well, and we won't go through all the reasons here. If you can just look back at my other videos, but this is we're just in the middle of some deep FUD. And some, there's just extreme fear in the market right now, and this stuff happens. Crypto is a volatile market, and that's just it is what it is. Nothing comes easy, right? And there's a high potential to make huge gains here, and so we have to deal with the volatility that comes along with it, and that just is what it is. But I think if you believe in the fundamentals of the projects that you're investing in, you should be fine. Right? I mean, over the long term, if you believe that the fundamentals in your project are strong, then your investment should make money over the long term. So, in other news today, Federal Reserve official says that stablecoin growth is exponential and deserves attention. The Boston Federal Reserve President Eric Rosengren notes that Tether could be a disruptor to short-term credit markets. So in a presentation titled Financial Stability, Rosengren identified the stablecoin Tether by name as a part of 3 different financial stability challenges. The challenges included risks to the housing market, the need for emergency lending facilities in times of crisis, and periodic disruptions to short-term credit markets, where Tether was noted as one possible disruptor. So, while Avanti Financial Group CEO Caitlin Long rang the alarm bells that this could be a harbinger of the Federal Reserve laying the groundwork for a regulatory framework for stablecoins, Rosengren ultimately seemed to be taking a more tempered view. So you can see here in the article that there's a series of tweets that went back and forth between Caitlin Long and Rosengren.
So I won't read the whole thing, but basically, Rosengren noted that the rise of stablecoins aren't a threat to credit markets on their own, but instead need to be evaluated in terms of the risks they might pose if they continue to grow as a segment of credit markets, and to what degree the Fed could backstop stablecoin dominated markets. She said, I do worry that the stablecoin market that is currently pretty much unregulated as it grows and becomes a more important sector of our economy, that we need to take seriously what happens when people run from these types of instruments very quickly, meaning when the markets dump. And I do think she's talking about market manipulation here. And just like the money market funds caused a bad disruption in credit markets, I think a future financial stability problem could be occurring if we don't start thinking carefully about what happens to things like stable coins next time we have a bad market difficulty. So Rosengren declined to say whether the Fed would step up to backstop Tether or any other stablecoin if they ever posed a risk to broader credit markets. He noted, however, that Tether's backing and the backing of other stablecoins basically looks like a portfolio of a prime money market fund, but maybe riskier. And as such, liquidity injected into money markets in times of crisis would effectively backstop Tether as well. So I don't think that this is going to lead to further regulatory frameworks, but there may be further discussions with some of these stablecoin CEOs about protecting the economy during times of crisis. So yeah. So in other news today, I don't know how many of you guys are aware of the VV platform. So I was actually one of the first investors in this platform, and there is an app you can download it. You can go to the Play Store or the Apple, whatever the Apple Store is. I don't really mess with Apple too much. But the VV platform is now going to be. I mean, they've hosted Marvel products before. I actually own a bunch of Marvel NFTs on this platform. So Marvel announces official digital collectibles are coming to VV. This was released this morning. Marvel have announced that they have linked a deal with VV to release a collection featuring non-fungible tokens to offer fans a unique virtual experience. The official Marvel announcement shared that the comic company has signed on to sell digital collectibles on Vivi. The Vivi app allows fans of many well-known brands to purchase items via the app in currency known as gems. The NFTs are available for purchase from either the official company store or from another user on the platform. Currently, Vivi has similar deals to sell NFTs from brands such as DC Comics, Star Trek, Ghostbusters, Jurassic Park, and Back to the Future. The NFT collectibles for Marvel-related characters will launch within the next couple of months and marks the first official move from Marvel to offer such digital collectibles. Fans will be able to not only buy, but also interact with things like 3D statues of their favorite characters and digital comic books. So the VV platform, allows you to um, purchase what are called gems, and you use those gems to buy and trade. There is a market on the VV platform that you can sell your NFTs. So it is pretty interesting. I bought a bunch of Batman and Robin NFTs when they first came out. Was a Back to the Future DeLorean. They had, Harlequin. They had some other characters on there. Very cool stuff. The digital quality of these NFTs is really high. But yeah, so I do think this is probably going to be one of the most up and coming NFT marketplaces. So yeah, check it out. Their platform is very transparent, very easy to use. They really take the whole crypto, stuff out of it, right? You don't have to have a wallet. You don't have to hold, you don't need to know private keys and all that type of stuff. It's very, very user friendly. And it's really great for kids, actually. My kids really love to look at the NFTs and mess around with them, because you have a vault you can store them in and stuff like that. It's very cool. Let me see if I can pull up the VV website for you guys and show you a little bit more about it. So yeah, so these are the Batman things. So here's some of the other collectibles that they have. So they got partnerships with DC. Um, let's see. Yeah, here's some of their collectibles here. This is what the interface looks like. Pretty cool stuff, though. So yeah, so VV. Here's some of their more recent digital collectibles. And yep, I own that NFT. I own this Robin right here. So yeah, it's pretty cool. There's just a it's just a it really makes it very user friendly. Um, you know, and they always have drops that you can become a part of. They will notify you by email when drops are on their way. So the Harley Quinn Deluxe 2. So yeah, the price is usually like around $60, and then there's I think 4 or 5 different levels of rarity. So there's ultra rare, rare, uncommon, common, yeah, and then so based on the rarity, um, the price will adjust. So yeah, so I mean I think picking up a few of these if you can. I mean, like, everything is sold out so fast on this website. Like, people are buying this stuff up like crazy. So yeah, that's Vivi, and yeah, I just figured I'd let you guys know that DC Comics will be partnering with Vivi, and so I think that we can see this might be a good investment for the long term for you guys. Who knows? Do some research. I'm not a financial advisor, but yeah, I just want to let you guys know. Also, in the markets today, we have a new product that has come out. It's called Risk Harbor, and I just figured out, I want to keep you guys updated on new things that are coming out. In my last video yesterday, I talked about Solonex, so the new AMM Dex that's going to be released on the Solana platform. So Solonex, you can go to their website. They are currently having a private sale on right now, and you can email their sales team if you're interested in getting in. But yeah, so Risk Harbor. So apparently, Risk Harbor is a risk management marketplace for DeFi. And it will utilize a completely automated, transparent, and impartial platform or claims process to protect liquidity providers and stakers against smart contract hacks and attacks. So yeah, so I wanted to let's just talk a little bit about what the product is here. Let me go to the app and we can just take a quick look at what it looks like. So basically, find the perfect pool for you, and it will explore the market and look for different pools that you can stake your crypto on. And I guess you just can come right here, connect a wallet. Then you can kind of go through the different pools here under the pools tab. So there's just only 2 right now. Looks like USDC pool, 2 USDC pools. So they are still in development. So yeah, so let's see if I can get back to. So let's take a look at the white paper. So Risk Harbor white paper. So Risk Harbor is a risk management marketplace for decentralized finance that utilizes a completely automated blah, blah, blah. Today, more than $60 billion is locked in DeFi protocols and smart contracts and has suffered over $375 million in losses from hacks and attacks. DeFi liquidity providers and stakers are exposed to an enormous amount of acute risks. In traditional finance markets, market makers would put use to options, credit default swaps, or other derivatives to manage this risk. But in decentralized finance, these derivatives either do not exist or are too expensive to be used for loss protection. Risk Harbor fills this gap by providing automated risk mitigation contracts tailored to fit the needs of liquidity providers and stakers. So yeah, so it looks pretty interesting. I think it is very important to diversify your portfolio. As much as I believe in a particular project, one of the errors that I made early on in my crypto investing was that I would go all in on a certain project and I would not diversify. And when I mean diversify, I don't mean just selecting one, different cryptos. I think it's important to diversify. If you're holding DeFi, it might be a good idea to diversify by moving into something that is outside of DeFi, right? Like maybe looking at something. I don't know that isn't within the sort of DeFi network. So for instance, Ethereum, Cardano, and VeChain all are working on DeFi applications, right? So even though it's slightly diversifying by holding multiple assets. um Holding those three is actually not a great way to diversify your portfolio. So, existing risk management protocols in DeFi rely on underwriters to assess whether or not a claim is valid and if a claim should be paid out or not. This process of allowing underwriters to vote on claim legitimacy is inherently flawed. The underwriters are people who stand to lose most from the valid claim. Therefore, they do everything in their power to ensure that a claim is invalid, regardless of the underlying merit of the claim. This is a clear conflict of interest. In both the outside world and in DeFi, an underwriter's primary goal is to optimize profits. So this white paper really kind of goes into the sort of philosophy. Risk Harbor delivers value through its permissionless nature and objective claim evaluation engine. Risk Harbor is available to all users and does not require Know Your Customer or KYC. So DeFi newcomers can purchase protection without having to jump through legal hoops. For DeFi power users and institutions, Risk Harbor allows the purchase and sale of curated credit default swaps. So this looks like just a great way to protect your assets. So Risk Harbor is a risk management marketplace which allows users to purchase protection that objectively evaluates and automatically pays out in the event of a hack or exploit on a protected contract. So it's basically insurance for your crypto investments. Instead of buying overpriced put options or other derivatives, users can purchase protection on Risk Harbor that shields them from individually selected risks. In other words, users on Risk Harbor only pay for what they need. Protection will be underwritten by other users known as underwriters who will also partake in and help build parametric protection. Underwriters will have the ability to create a variety of unique protection pools with custom parameters, such as premium, protected events, loss threshold, underlying to protected, and pricing asset. So very, very cool. So you'll be able to get in on both sides of the action with Risk Harbor. So it looks like, let's just see if they have any information on their current plans. So it looks like it's very cheap, $4 a month. Everything included in free plus protected branches, multiple reviewers, pull requests, draft pull requests, code owners, required reviewers, blah blah blah. So I think this is the developer side. Let's take a look at their current community. I'm going to jump into Discord. All right, so here we go. Risk Harbor. So let's see how many people are on this community here. We can dig a little bit deeper into what's happening here. Risk Harbor. We're excited to announce that we are now supporting the at Barnbridge protection pool on Risk Harbor. There is 1 million in protection available at 0.1% premium, which is extremely efficient and buyer friendly. frequently asked questions. So there's some links in here so you can access all of their socials from their Discord. And then it looks like there's currently a fake Risk Harbor token in circulation with the address blah, blah, blah. The only legit Risk Harbor ERC20 asset is the untradeable ticket token, which you cannot buy or trade. So it looks like Risk Harbor is not available for trade currently. Yeah, so just be careful, when seeking out new assets like Risk Harbor. There's oftentimes people will put out, sort of, these fake coins and try to get people to buy them. And so you just got to make sure you're double checking, doing your research, go, join their Discord, read what's happening, kind of, use their links in their official Discord. Just smart practice, right? I know it takes like extra step to to go through and dig through all of these posts and stuff like that, but trust me when I tell you, you don't want to jump into a project and find out later that that it's not a legit project that you just bought. So Risk Harbor, great for portfolio risk management. I figured I would just should give you guys a little intro into that. We'll dig a little bit deeper into this as it rolls out. We'll also talk more about the Solanax project and and what's happening on Solana in the next video. I've been doing a lot of research on Solana. I do think Solana is a great project. Their speeds are, and their the amount of transactions that they can process per second is pretty impressive. So I do think that Cardano and Solana are gonna definitely be competitive. Let's see what happens with Cardano. Obviously, Cardano has been, doing a lot of work behind the scenes for a long time. I do think that they have a lot of funding. I'm going through some of the financials on Solana now. We'll do a comparison in the next video on Solana and Cardano and see what can we expect from these two, and how will that impact the market share for Ethereum. So I think it'll be interesting. It might not happen in this bull market. We may see some competitiveness in market, competition between Ethereum, Solana, and Cardano. But I do think in the next bull market, we can expect that, it'll be impressive to see. I think that there's going to be, the battle between, can Ethereum get their 2.0 out before Solana and Cardano gain mass user adoption? I mean, that is the question. And I think there's other projects too that VeChain is making their way into the market share. Obviously, VeChain has a big market share in real estate, ENFTs, supply chain management, all of that stuff. So it is a little bit different than Ethereum, but they do have DeFi projects as well. And so, I think it'll be important. It'll be interesting to see sort of what happens over the course of the next couple of years with the smart contract platforms. So this is Risk Harbor. That's pretty much all I got for you guys today. I just wanted to touch base on those things. And let's keep an eye on the market. We may see further upside over the next couple of days as call options kind of run out. As the Bitcoin options sort of the calls run out, and we may see further upside. So keep an eye on the markets and don't get caught with your pants down. Have a great day and enjoy the rest of your weekend.